China falls short of purchase targets of Phase 1 trade deal with U.S. Washington, China came nowhere close to meeting its purchasing targets set out in the 2020 trade deal with the United States. Data released on Tuesday showed. The data gives the first complete snapshot of what China's purchases of goods and services were over the full duration of the Phase 1 trade agreement, which had a December 31, 2021, deadline for China to meet its goals. The verdict underscores how problematic the agreement was from the start, and raises the question of what the Biden administration will do to hold China accountable for not meeting its obligations, which officials previously vowed to do. Analysts also note that the deal was further undermined by the pandemic and the screeching halt that the U.S.-China trade wars tariffs had brought to some exports. 2 years ago, President Donald Trump signed what he called a historical trade deal with China. Today, the only undisputed historical aspect of that agreement is its failure, said U.S. trade economist Dr Bown of the Peterson Institute for International Economics in an analysis on Tuesday of the trade data. Under the agreement, inked in January 2020 after months of tit-for-tat tariffs, China committed to buying an additional $200 billion worth of U.S. goods and services, based on its 2017 levels of trade, by the end of 2021. In total, it should have purchased $502.4 billion worth of American exports over 2020 and 2021. But in the end, China bought only 57%, about $288.8 billion worth of U.S. exports it had committed to purchase. This did not even reach its import levels from before the trade war, noted Dr. Bown, who tracks U.S.-China trade data. Put differently, China bought none of the additional $200 billion of exports Trump's deal had promised, he said. He attributed this to 2 years of the trade war having dug a really big hole for U.S. exporters in 2019, which they found difficult to climb out of. American autos and aircraft took an especially big hit. Carmakers like BMW and Tesla, for instance, responded to China's retaliatory tariffs by moving production meant for the Chinese market out of the U.S., and exports did not recover even after the Chinese tariffs were lifted. On the other hand, exports of American semiconductors and COVID-19 medical supplies fared much better and exceeded their target. Services exports, which made up a third of U.S. exports to China, were devastated by the pandemic, as tourism, business travel and education-related travel experienced sharp downturn. Meanwhile, agriculture exports, which formed about a tenth of U.S. exports to China, largely recovered from the trade war, aided by government subsidies, but they, too, did not reach the targets set out in the deal. Was the trade war worth it for U.S. exporters? The answer so far is no, said Dr. Bown. The glaring question of what President Joe Biden will do next remains. U.S. Trade Representative Katherine Tai said in October last year that Washington must enforce the terms of the deal, but the trade deal lacks an enforcement mechanism to get Beijing to close the gap. Reuters reported on Monday that U.S. officials were seeking concrete action from China and said they were losing patience with Beijing. Said Dr. Bown, in principle, you could raise tariffs, but we've seen the evidence that that's actually shooting yourself in the foot. He said that the deal was not a total washout, having halted the trade war and secured China's commitments to remove technical barriers to U.S. farm exports, respect intellectual property, and open up its financial services sector. Trump set the U.S.-China trade relationship on a new path, said Dr. Bown. The main lesson of the Phase 1 agreement is that different terms for the trade relationship are still needed.